let's talk about the Waves cryptocurrency because it is moving up a lot in the last 24 hours. We're looking at a gain of 72% in 24 hours. It's the top cryptocurrency in terms of performance when we look at the top 100 in market cap. So nothing gained as much as Waves. It's being followed by Axie Infinity, 46%, and Helium, 26%. All of crypto is going up, right? Bitcoin is going up 7.7% and Ethereum 10.3%. But Waves is definitely massively outperforming. It is, by the way, at market rank 63. So it's the 63rd largest cryptocurrency with a market cap of 0.8 billion. Now, before we go into the US dollar chart here and in the relative valuation chart to Ethereum, let's first look at trading volume. And I like to look at CoinMarketCap's trading volume chart because it aggregates the trading volume across different exchanges. And you want to not just look at trading volume on one exchange, but on all exchanges. That's why I like this trading volume over here on CoinMarketCap. Now, what's important to know about trading volume is that it's very often an indication for when a trend tends to turn around. So look at this spike over here, right? On the 29th of March 2022. Trading volume here was really, really high. And the price also tended to be really, really high, starting the reversal for the downtrend afterwards. We see something similar, but in the other direction here on the 26th of January, trading volume was pretty high. We used to bleed and then we turned around to the positive direction. So when trading volume is high, it simply means that token distribution moves from one side to the next. There are new investors here. The people that buy when the prices are so depressed, they tend to be okay with risk, right? They tend to be okay to continue buying several times, potentially supporting the price. The people that buy when prices tend to rise, when they're elevated and when all of these tokens change hands, they here tend to be the short-term speculators, right? That simply want to bet on short-term continued rising prices. But if there's only the slightest hiccup for that trend, the whole thing will reverse. So we always have to look at trading volume as an indication for when the current momentum might turn around. We have seen two massive days here of trading volume just recently, which would potentially indicate something rather positive, right? Because we have been going down for a while. That being said, I like to rather get in when trading volume has normalized again to see, does the price actually really stay at this elevated level? Can it keep the price? Because usually we don't see like a direct V shape after a crash, right? Usually we see some kind of a sideways consolidation. We can see this in several cryptocurrencies. We also see this in Bitcoin and Ethereum, etc. Usually we first stay low for a while before we can pick up another rally. If this is a turnaround from this recent crash, it's likely that we're not just going to shoot up again to 60 US dollars. It's more likely that we go sideways for a while and then potentially rally again. Now, this is the US dollar chart long term here on a logarithmic scale. You can also look at this on a linear scale, but then we don't really see what happened here in the early times. So I like to look at this logarithmically. So the same distance here means the same percentage change. When you've got a linear scale, you only have the same distance equaling the same US dollar amount. That's not as useful for the early days. And here we can see these massive drops temporarily, right? 97%. You definitely don't want to be in the market during these kinds of periods. You also see just this recent, what looks just like a dip, right? It was still massive. If you bought at the wrong time, you would have seen temporarily a loss of 92%. What does that mean? It means you put in 1,000 US dollars, you have 80 US dollars left after this move. So it's unlikely that you'll have the diamond hands to simply just hold this through all the time. I think it makes sense to try to time this somewhat. And this becomes even more apparent once we look at relative valuation. Now, we can look at different relative valuations. The reason why I want to look at relative valuation is because cryptocurrencies tend to move in the same direction at the same time, right? As we can see today. When times are bullish, basically everything is going up. When times are bearish, the opposite is true. So looking at US dollars doesn't make too much sense. You take on more risk by going down this list in market cap, right? The smaller your altcoin, the more risk there is potentially. And with that increased risk, with the increased volatility, you want to get long-term outperformance. Why else would you hold this over the long term, right? So let's discuss the long term And let's start with the simplest of the relative valuations, waves versus Bitcoin. This is the waves to Bitcoin chart. And this looks pretty different to the US dollar chart, right? This is the US dollar chart, all nice and rosy. We have come up by almost 6x or 500% increase. Once we look at this relative to Bitcoin, it doesn't look as flattering, right? Drop, relative underperformance of 75%. But still, right, we see these short-term rallies here, 1,400% or so. It is in the end a game of buying low and selling high, and don't forgetting the exit points. What's important, it's actually relatively easy to buy low because you just look at the time frame, we tend to be at lower prices for a longer period of time. We crash down, we consolidate for a while, then we can rally again. So we tend to be at lower prices longer, so we could potentially dollar cost average in. We are at elevated prices usually for a very short period of time. So we have to take advantage of elevated prices very, very quickly. And especially when we dollar cost average in, right? So let's say you're buying $100 every month of your favorite cryptocurrency. So let's say that is waves. You buy $100 all the time. Then in the end, after what's that time period? A bit over a year, you've got $1,200 in that cryptocurrency. When it then shoots up, then you have to exit with way larger amounts, right? You can't just exit with $100 US. You have to suddenly dollar cost average out at a much faster pace because the heightened prices, they exist in the market for a much shorter period of time. So maybe then you have to DC out every month by like $400 or at least $300 because the depressed prices, they come back relatively quickly again. And this is how I see this current move here as well, right? We've crashed again quite massively, but it's unlikely that we are going directly V-shape like up like this, right? That's relatively unlikely. Usually what happens is we rather see some kind of a U shape, right? We're crashing down, we consolidate lower, we go up. We're crashing down, we consolidate, we go up. And sometimes the consolidation is relatively short, right? This is 1 month, but it's still 1 month, right? Going down, 1 month sideways, go up. So I would be surprised if this here actually happens. I don't think it will. I think it's much more likely that we will consolidate for some kind of a period until we can go up, if we actually do go up directly. Sometimes we just crash down, we turn around a little bit and we continue crashing. Now let's look at waves relative to Ethereum, because I think that's actually the better comparison. Most people don't really look at this. Most people just look at the relative valuation to Bitcoin. But in the end, fundamentally speaking, right, Ethereum has much more in common with waves than Bitcoin has. Bitcoin is simply just a long-term hold, a portfolio allocation, a diversifier to a stock portfolio, to a property portfolio. Ethereum is not necessarily only that. Ethereum is also used for speculation. Ethereum is also a technology play. And if we look at this mathematically, by the way, the correlation of the daily returns between Ethereum and waves is higher than the correlation between Bitcoin and waves. And that's typical for pretty much any altcoin. So there's more commonality in terms of price movements between Ethereum and the alts and waves or Bitcoin and the alts. And this is the relative performance. And this is what I mean with long-term holding, right? If you compare this now to another altcoin that still has way less risk than waves, right? You could argue that Ethereum is the least risky of the altcoins. You still see somewhat of a consistent underperformance. Let's take some kind of a middle place here in this downward trend. Still 77% long-term underperformance. But when you do write this correctly, right, you can make temporary 300% outperformances. But you don't want to be the sucker that loses 70% versus Ethereum. Currently, we are relatively cheap here, right? But again, as said, I personally like to first see the sideways movement. I would actually be surprised if we directly, from this current price of $7.61, shoot up to like $10 and $15 and $20. It can happen if all of crypto is shooting up, simply due to correlation. But just in terms of outperformance, I'm not so sure. I think the world is much more noisy than that. And some people that might have lost massively in this recent crash, they might now take this opportunity to take some profits. But yeah, overall crypto doesn't look that bad right now. This is Bitcoin versus Tether, and I'm pretty sure you have seen other YouTube channels that have drawn the exact same kind of horizontal lines, right? Everybody is talking about this trading range between around 30K and 65K. We are now on the lower end, and it's very, very encouraging to see that we are bouncing back from this support. Is this already the decision that we are going like straight up from here? Not necessarily, but I do want to see this 48-day simple moving average to be crossed first. So I've done back tests. Feel free to check out other videos on this channel. I've done back tests to see what kind of moving averages work best for different assets. For Bitcoin, that's the 15-day exponential moving average and the 48-day simple moving average. So that's what you see over here. It's nice that we have crossed one of those moving averages now, but we are still neutral, right? Once both of those moving averages have been crossed, I'd be much more bullish. And in order for this to get crossed, we have to either go really, really insanely bullish in the next days, or alternatively go sideways for a while. Same thing as for waves, right? We want to be consolidating for a prolonged period of time until support is really, really determined. It's really, really strong until we can build up from there. Otherwise, we can see fake outs as we have seen in the past, right? It's similar to here, right? The exponential moving average was pretty far away from the simple moving average, and then just a cross of one of those moving averages might not mean too much. So I think it's good to rather be too cautious than being too optimistic. We've all seen what can happen if we are not cautious enough, right? We've seen this crash in waves. So that's what I'm personally doing now. I do think that this heightened trading volume here is a signal. It's now other people that own this asset compared to the ones that own it in the last few weeks. And that's positive, but still, I think there is no rush here. I don't think we are going straight up from here. Usually when we are coming down, we first consolidate for a little while before we can return back up. But of course, I'm just a random guy on YouTube. I have been wrong plenty of times. Do your own research, do your own analysis, and simply take this video as another opinion, as another data point in your journey for hopefully profitable trading. Now, I publish videos on this channel regularly. So if you haven't yet subscribed, please feel free to do so. And in case you've got Telegram, don't forget to check out this channel over here. We are more than 2,000 people already. So simply search for Bitcoin Strategy channel within the Telegram app. Thanks for watching and see you in the next one. Bye-bye.